Hey, good morning, everybody. So this will be the watch list for Monday, January 13th. Before I get through this week's economic news, I want to talk about what happened on Friday. So on Friday, we saw a precipitous market sell-off, which was due to a very hot jobs number. So we created about 100,000 more jobs than what the street was expecting. Unemployment also fell, and then simultaneously, job wages went up. So what does that have to do with the stock market? Well, when you have a very robust job market and employment is in full swing and wages are rising, then guess what's not coming down? Inflation. So if inflation is not coming down, then there would be no reason for the FOMC to start lowering rates in 2025. So in the fourth quarter of last year, we thought we were going to get 4 rate cuts this year. Then after the December meeting, the December minutes, the street basically said, okay, well, we think we're now going to get 2 rate cuts this year. Well, after Friday's jobs number, they took those rate cuts down to maybe 1, possibly none, and then potentially even a rate increase later this year. So right now, the street is pegging that we'll have our first rate cut possibly in June, but it's not guaranteed. And then we have some Fed governors speak this coming up week, so we're going to want to hear what they have to say about that hot jobs number. So right now, the street is estimating no more rate cuts until maybe June, if at all. And then the fear side was that we start raising interest rates again. So what are we going to be paying attention to? Well, first and foremost, I think it's going to come down to earnings. So if you look at the economic calendar for the next couple of weeks, you will see that the banks are going to start kicking off earnings on Wednesday and Thursday into the beginning of next week. We are going to want to definitely listen to what the banks are saying about the strength of the consumer. We're going to want to listen to how interest rates are impacting the economy from an overall debt level perspective. One of the concerns on the commercial side is that corporate bankruptcies are now back up to the financial crisis high. So more and more companies are filing bankruptcy. Now, the interesting thing is the stock market was up 20% last year. It was up 20% the year before. But the stock market going up 20% is not a broad-ranged market moving up. It is the same 7 or 8 names: Google, Meta, Microsoft, Nvidia, Apple, Tesla. The entire market move is being concentrated in just such a few names. So when you don't get a broadening of the market and participation, then things will deteriorate even quicker to the downside. So what is the market anticipating for this year? And this is what I want each of you to give some thought to. We've had great success trading QQQ and SPY over the last 2 years. It was fairly easy to trade for one simple premise. It was only going up, so it was moving from left to right in a stair-step fashion. This year, the market is predicting that the S&P and QQQ may give you a return of 5%. Well, if you're only going to get a return of 5%, we're talking about a very narrow move, which will then result in a lot of market chop. A lot of ups, a lot of downs, volatility is going to increase, but at the end of the day, you're really just spinning your wheels. So one thing that I'm going to start also focusing my time and attention on are not only the indexes, but I'm going to start looking for more individual setups, more catalysts that have an opportunity to move depending upon what the overall market is signaling. So this upcoming week is going to be a very heavy news week. One, again, we have the banks. We have to hear what Citi, Wells, Chase, B of A, BlackRock, PNC, the regionals, US Bank are going to say about the overall strength of the consumer. We'll get through that, and then the following week is kind of quiet for the most part, but then we're going to get into tech earnings. So we're going to have Tesla, Meta, Microsoft, IBM, Apple, so on and so forth. So this will be a very big week, which will be the very last week of the month. However, we have a ton of data. So let's go back to why the market sold off on Friday. It is worried about the jobs, the strength of the jobs, along with inflation. So Monday is going to be a very quiet day. Yes, we have the monthly U.S. federal budget. We already know it's out of control. And for some reason, nobody wants to talk about it. That'll rear its ugly head at some point in history. We don't know when, but when it does, be prepared. Tuesday is going to be a big day. So we're going to have the producer price index. So this is what are the cost of goods, raw materials, costing manufacturers to make goods and services. We're going to have the PPI. We're going to have the year over year. So the producer price index, what is it costing companies to make goods and services? Because if that cost is going up, guess who pays for it? The consumer. They just don't eat that cost. We're going to have our Kansas City Fed president talking, as well as we're going to have the New York Fed president Williams giving some opening remarks to the market. Wednesday is going to be CPI. So now this is the consumer price index. What are consumers paying year over year? What are they paying from an overall inflationary perspective? Some very, very important numbers that we're going to watch before the market opens. And then yet again, and I hate it when they're talking while the market opens, now that the market wants to listen to them, but we have 3 more Fed presidents that are going to be speaking. Thursday, another big news day, jobless claims. So we're back to the unemployment. We're going to have import prices. So why are import prices now more important than in the past? Because the new administration is talking about a ton of tariffs. And if you have a lot of tariffs, guess what's going to happen to import prices? They're going to go up. They should not come down by nature, but we don't know what the extent of that is going to be. So we also have the home builder confidence. I've been talking to you for the last several weeks now to watch the home builders, but they have just been selling off precipitously. So we'll want to see if that continues. Now, the 30-year fixed rate mortgage is now back above 7%. Well, what does that have to do with the price of tea in China? Well, a couple things. One, nobody's looking for new homes, right? It's just too expensive when everybody is accustomed to having a mortgage at 3 and 4%. So you're not going to sell your house at 2 or 3% for a mortgage and then turn around and go buy something at 7%. Mathematics just doesn't work. And then we're also going to want to keep an eye on housing starts, building permits, and industrial production. So we have a lot of news events going on this week, and it gets amplified because of earnings. So while you could have this data move in your direction, you could be having something that the companies or the banks say that will negate that. Okay? So you're going to have to be very patient with waiting and taking some A-plus trade setups. Now let's take a look at the market. So a couple things. Remember, Confluence trading. I like to trade SPY and QQQ side by side. Doesn't matter if I'm trading SPY, doesn't matter if I'm trading the Qs. I want to watch both of them. The other thing we have to be cognizant of is what is happening in the futures. So if you are not watching the futures data while you're trading SPY or QQQ, you're going to be missing out, right? And why? Because all the money center and the big money managers, they're not trading the Qs, they're not trading SPY, they're trading the futures. So while they will mimic and mirror the actual ETFs, you have to be cognizant if you are in demand, like we are on NQ, or are we in supply, like we are on ES. So do keep that in mind. But let's look at each of the names individually, and let's go ahead and start with the Qs because that's what's up here on my screen. Note we are in very high demand of 1 week, which is a very strong. Your monthly and weekly are 2 of your strongest, other than your quarterly and your annual. But I would not want to be necessarily shorting this market. So one of my rules is, even if the market is dropping, I don't want to be taking puts. Why? Because they could bounce it and reverse it at a moment's notice, and your put will deteriorate exponentially faster. So what I'd want to be looking for is, where could I take a bounce? So as I look back here on the charts, a good area of interest or a bounce area is going to be about this 505.31. So if the market starts to sell off on Monday morning, I am not jumping in puts and chasing this. I'm going to be patient and wait to see what we do around my level of 505.31. Now, also note, it's not to the penny, right? These are areas of interest. I want to see a catalyst with volume, confirmation of the news event, overall market to then move higher. So I do not, for me, want to ever take puts when I'm in demand. It's just, you're going against the trend, which just makes no sense, okay? So these are my levels. We break 505.31. Do I think we can push lower? I do. I think we could push down to 503, which would be another very solid level where we're back here multiple days where we are bouncing this. We fail this, then I think you have an opportunity to go down to 500. But we have to be patient and watch, okay? Let's take a look at SPY. So SPY, again, we are in very heavy demand here. Now, you'll note that when I was talking to you about ES, we were in supply. So if this is going to drop, what I would be watching for is for us to come down and want to retest some of these overall demand levels where we bounced in the past, right? This is an area of interest. It could bounce at the top of the box. It could bounce in the green box. It could bounce at the bottom of the box. We break through the bottom of the box, then I definitely think you're heading lower. So that's kind of how you will use these in confluence when you are trading. Okay. We also have a gap down here that was not filled. Now they really put some pressure on it back over here on December 20th, right before the holidays, where the gap was significantly bigger. But again, we break through the gap, or we start to approach this gap. You'll note that we have some very low time frames here of about 45 minutes. I think we could then press down to the 574 level. So again, don't want to short. I'd rather be patient and take the bounce if the market gets some momentum to the upside. But then also, let's think about, is there opportunity in individual names? So I'm going to start with Apple, one of the biggest. It has a ton of weighting in both QQQ and SPY. It's actually the number one weighting. You will note here that we are rejecting off my price level of 237.49. We lost it here and retested it. So we came down, we retested it, we failed. We failed to 232.92 on Friday, okay? So we know this is a strong level. Then also on Friday at 11 o'clock Pacific Standard Time, we rejected it. Right at the market close, at exactly 1 o'clock, it is pushing down. So how does this create opportunity for you? Well, it does twofold reasons why I would maybe look to trade Apple. One, we have very weak demand, 30 and 45 minute. Many of you ask, Bill, why do you keep those on the chart? Because they're so weak that if we start to press into them, the likelihood that we're going to fail and go to my price level is very high. Now we have the same thing on overall supply. We only have 30 minute supply above. So if the market gets some momentum on some good news on Monday, guess what? We're going to go up to this 237.49, and then I want to see how we react. The market's going to do one of two things, right? It's going to come back up here, and it's going to retest this, and then head lower and go look for more buyers, or it's going to go up here, bounce above it, come back, retest, and then let's move higher because we don't have any sellers until we get up here to 242. Now, just because we don't have sellers here doesn't mean that it can't come up and then drop down. So some of the other things we could obviously look at is, if we wanted to, is, well, let's just take a fib level and see where we're at. Note that this fib level right here is just above my price target, 237.49, 237.85. We get above that, we will typically go to 238.99. We hold that level, we're going to 240. We break above 240. My experience is we will always go back here and target this prior pivot. So this is how I will also use a fib level in conjunction with supply and demand along with price levels, and then sit and watch how it responds. So mind you, Apple is going to be one of those key stocks. Let's take a look at Tesla. So Tesla has been coming down. You will note that we have buyers and sellers on top of one another. So for me, this is just a no trade stock. I don't care what it's doing. It's going to be too unpredictable. Why is it too unpredictable? Because the market is agreeing on price. The buyers are saying it's worth $391. The sellers are saying it's worth $393. When you see a lot of overlap or very close proximity of buyers and sellers, then the market is balanced. And then what has it been doing over the last several days? Just chopping around between 390 and 400. 390 and 400. Now, is this a stock I want to trade between 390 and 400? Hell no. Why? Because the volatility is too high and the options premiums move so quick that the likelihood that you will get stopped out or wicked out of your trade before it moves in the direction you want it to go is highly probable. And you can see that with the overall volatility. Now, you could clearly play the reject here at 400, 400, 400, right? But here, we didn't even get up there. And I think you're just playing with fire if you're going to try to trade Tesla. Not that you can't do it, but it doesn't give you a lot of opportunity until we get above 400 and then get above 405 and then really start to push to the higher prior pivots. Okay, let's go ahead and take a look at NVIDIA because this is another one with the chip sector that has had some, challenges, right? It was all the way up here at $153 on January 7th. I mean, just a week ago. And then they literally sold this thing off. So let's take a look at it on a 1 hour time frame. Lots of volatility. I think if we break, and this would be a good one to watch on the individual name, but if we break this 135 level, and especially if we break 133, I think we're clearly heading lower. So this would be a good one to keep on your radar, where right now we have the buyers and the sellers that are aligned on price, okay? But I will tell you, we have 1 hour demand, which is fairly strong, but once they get through that, it's only 45 minutes. And then down here, again, it's only 45 minutes. And then we'll drop all the way down here till we get to 1 day and 4 hour demand, which is going to be fairly strong. So watch for weakness. We would want to see us come down here. And does this hold to move higher, or do we start to break through the 45 minute of buyers and then head lower? I mean, this is what I love to trade, are these huge black areas, right? I don't like to buy puts here, and I don't like to buy calls here. Why? Because it's not in my favor. I like the wide open space where we break this. Maybe it moves a little higher, but then it's going to seek lower to the downside. Let's take a look at Meta. And the reason I'm looking at all these big market cap names is because that's what's going to drive the cues in the market. So Meta, we are in good overall demand. Now, the reason for this is primarily because TikTok is most likely going to be banned by the Supreme Court this week. And if it does, it will then transcend millions and millions of users back to Snap, back to Meta, back to the alternate social media platforms that maybe have lost some overall consumers. So how would I play this? Again, if we have strength, we have 1 hour supply above, but if we can break above that, I would definitely play this back to a pivot high. Or worst case scenario, you can play it at least to the fib level of 621.73, right? So if we get some strength, at least I think there's a run here back to the fib. Maybe it rejects and goes lower. Notice how the 618 fib perfectly aligns with this 30-minute supply. We get above it, we go higher. So this is another great reason why to keep some of these individual names on your watch list. Let's look at Amazon. Almost exact same chart as Meta. This one, again, I don't like as much. Why? Because I have a lot of sellers on top of a lot of buyers. So the bias is definitely going to be to the upside. However, if we fall through 215, 216, and we fall out of where these buyers are at, and we break my prior pivot that was from all the way back here, which was resistance that turned to support, this is actually another really good support line in the sand. You can see it visually where we bounced right here on this candle. Okay. Well, let me move that down for you. We bounced on this candle. We bounced on this candle. Note that it's the bottom of the zone. So what I would do is where we became resistance does become support. So this is a great example of how you could have two lines within 50 cents of one another. I'm going to save those. And then if we break below, this is only 45-minute demand, 45-minute, 30-minute. I think we could be pushing all the way back down here to 211, which would be a great winning trade. Let's take a look, if we could, at a couple of the banks. We have bank earnings coming up this week. We have definitely had some pressure because, again, Treasury yields are back up to 5% on a 10-year. Note, Wells has been holding well, this 69.70 range. We lose this, we have room all the way down here, down to 65. So I would not try to front run this, but what I would do is I would wait for earnings to come out, and then what this could do is give you a nice catalyst to the downside or a push back higher. Now, mind you, we have a long way to go if we were to draw a fib. Your fib is going to be back up here at this pivot level, so there's some definite room to the upside. The other one that I've been trading that I've had a ton of success on over time, and I was just playing it with my price levels more so than anything. I was up nicely on my 75 calls. It made it all the way to 74.31 last week. I should have sold them, and I didn't. I held, and I ended up taking over a 30-some% loss on the jobs data on Friday. So once we broke below the overall supply level where I thought it was going to hold, I just unfortunately had to exit the trade. But again, I was playing with house money from my December profits. So this one still looking somewhat a little bit to the weak side, only 45 minutes and 3 hour. We break below this. I think we're going back down here to my price target of 70.09. For this one, though, at $70 a share, that's approximately book value. And this is the one regional money center bank that is trading on the lowest price to tangible book value of any bank. So this is a long-term equity buy for me, as well as you can play with some overall options as well. Let's take a look at Bank of America. So Warren was a big shareholder and he's been selling off. Same exact thing. We are where there are sellers. There's really no buyers until the 4 hour down here. Now note, it's only 20 some cents away. So you're not going to want to be shorting this. You have to look at your price, right? It looks a long way on the chart, but price-wise, it's really not. But a good buy area would be about 44, 46. So again, I don't think you jump into these with calls on earnings. You wait and see what they have to say, and then you'll use your prior pivots as price targets to the upside or to the downside. So hopefully this has been helpful for you. If you have any questions, just feel free to shoot me an email or let me know what you're thinking. But again, the most important things from my perspective when trading the market is patience, understanding the structure of the market and the market news, right? So we're going to be watching news events. We're going to be watching the earnings announcements of companies and just waiting for your levels, right? Don't take calls when you're in overall supply and do not take puts when you're in overall demand. I mean, if you can just abide and live by those rules, your overall profitability and success will go up exponentially because you are trading with the trend. You are not trading against it. So with that, everybody, have a fantastic Sunday, and we will all talk soon. Take care.